So today I've got one of those videos for you guys where I talk about plenty of stocks, a lot of different subjects. There's quite a bit to cover. There's Starbucks, there's some DraftKings news, some Huya news, some inflation data. There's a lot of stuff going on, so we thought I'd just cover it all in one video for you guys. So I hope you enjoy it. Let's get started. So I'm just recording this video before the stock market opens today, and in pre-market it's pretty stagnant out there. The reason why is because everybody was waiting for the US inflation data, and the US inflation data came in and it was basically what was expected. So the market was like, okay, where do we go from here? So by the time you guys see this video, it might decide it wants to go up or goes down, but I think the market was waiting for this data, and if it would have been 2.9, 2.8, the market would have freaked out in a positive way and been like, oh, yep, definitely a rate cut coming. And if the inflation data came in a lot weaker, it would have been like, oh, are we going to get this cut? But it's still deciding where to go because it came in exactly where it was kind of expected, and that's still around that 3% range. So yeah, not much going on the US inflation data. The UK inflation data though, very positive again, came in at 2.2%, better than what was expected. And if you look at the FTSE 250 for example today, having a pretty good day. Quite a few of the UK stocks having a pretty good day out there. And once again, I just think it kind of comes to the point of view like, why were we not cutting rates quicker in the UK? It should have happened a few months ago. And yeah, once again, you're kind of looking and thinking, why were we so slow to do it? But that's the inflation data. Not much to kind of talk about there. What there is a lot to talk about is Starbucks. Wow. This one shocked Wall Street and investors. What a day it had yesterday. The last 5 days, Starbucks is up 27%. Not normal to say that with a company like Starbucks. It's not a stock that moves that much. But there was some big news that came out. I think this was the biggest. Someone put it on the Discord, so I apologise for whoever it was. Someone put on the Discord like it was Starbucks' biggest move in a day since like 1997 or something crazy like that. It was a mega move for Starbucks, and yeah, the stock was up a lot. The news is that they came out with a new CEO. That, in my opinion, was not much of a surprise. I think we were always going to get a new CEO in Starbucks. The new one that came in was not doing a very good job. Laxman came in as a CEO, and it's fair to say he wasn't really impressing a lot of people out there. I think when he went on to do the interview with Jim Cramer, and Jim Cramer absolutely tore him apart, he looked lost. He looked like a deer in headlights. I think when we saw that interview on CNBC, we went, oh dear, this is not good. Obviously, it was some weak earnings. He didn't really, in the quarterly earnings, he kind of looked a bit lost on where the company was going. And then obviously, the CEO, when he did the interview with Jim Cramer on Mad Money, I think a few people were a little bit worried. I was looking at it as well, and I was like, okay, you know, it's a good brand here, but is the management going to be able to keep this good brand going in the right direction? And I think we all kind of knew his days were a little bit limited maybe after that interview, but I think what kind of confirmed it is obviously we saw Elliott Management come in, and they bought a big stake into Starbucks only a couple of weeks ago, and I think when they bought the stake it was like, okay, they're going to be on there saying like, you're going to get rid of this CEO. I think it was pretty much nailed on that he was going to get booted out when Elliott Management kind of came in, and that's what happened. So I think the surprise of the CEO going isn't much of a big one, and I think it is the right move. What was probably the bigger move is who they bought in to replace him. So they brought the CEO in from AAA. AAA actually lost a fair bit on the day. It was down nearly 12%. Some buyers did come into it though eventually, but that was a big surprise that he was going to move away from AAA, considering how well they're doing. A bit of a risk maybe, but yeah, really good CEO. If you look at what he has done over there at AAA since he was the CEO, I think he's basically got the revenue to nearly double. But what also has been pretty impressive is he's got the earnings to go from like 350 million up to like 1.4 billion, and one of the big ways he's done it is he's doubled the profit margin. So I mean, if he can do something similar over there from AAA up to Starbucks, that would be very good, because you look at how AAA's stock has performed since he's been the CEO. I think, yeah, it's done quite well. I think it's been nearly a 2x or a 3x. So, yeah, very good appointment. I'm glad this... I don't want to say, you know, it sounds a bit awful saying this, but I'm glad they've changed the CEO. You know, it's not nice, but unfortunately this is the game, and he wasn't doing a good job and didn't fill us with confidence. And what is even more impressive is I think the appointment. I think it's a really good appointment from Starbucks. The stock obviously had a really good reaction off it. I don't know if it was a bit of an overreaction, you know, going up 27% off a new CEO. Yeah, it's good news, but that's a lot priced in already there. So yeah, big move from Starbucks, big shock on Wall Street there, in my opinion. Next one, Huya. I thought I'd point this one out. I've had a few people messaging about this one. Yeah, Huya up 21% in the last 5 days. Pre-market's also looking a little bit positive. And once again, Huya, it's a bit annoying this one because I see Huya, it's one of those stocks that's kind of thrown at me like, oh, Huya, it's not performed that well since I've bought it. I think I'm down around about 60 something percent. However, they did just pay a special dividend, which was like a 14% yield or something. So probably around about 50% down maybe on the position, and it hasn't done that well. The really annoying thing is that financially they have actually done really well. It's just that they've been slapped with loads of Chinese regulations on it, and if it wasn't for the Chinese regulations, I think this company would have done really well, which is a really frustrating thing. That's one of the annoying things in the stock market, when something doesn't go well and it's out of your hands, or as well as that, you know, something that should have done well and it hasn't, and you're like, why hasn't the market valued that where it should have been? And Huya is one, it comes on the category of one that I think if it wasn't for the Chinese regulations on it, this would have done really well, unfortunately, but we are where we're at. But yeah, they did do a share buyback. They also announced another special dividend. So even though I'm down, 60%, 50% maybe if you include the last special dividend, I'm probably gonna be, I don't know, like 50% down after this special dividend. 40% down after this special dividend, which isn't too bad. It kind of plugs the hole a little bit about where we're kind of at with this one. But yeah, they're going to do a special dividend of 1.08 per share, which obviously it was even bigger before they jumped yesterday. I think it was like a 25% dividend yield. But obviously even now it's still going to be a pretty big dividend yield, and they're using that cash pile up, which is really good. You know, there's a lot of companies you look at for ages, like use the cash pile, and the way they've chosen to do it is there. And as well as that, the company's financials are starting to move back in the right direction as well. I mean, on a forward P, if it gets to 27 forward times earnings, are starting to step back in the right direction. So we'll see where we're at. I've not really ever considered selling my Huya position because I still think they could some way turn this around with advertising. So we'll see what happens with Huya. The King, what a volatile one this has been. Year to date, a bit disappointed to see it down year to date. I don't think DraftKings should be down year to date. I thought right now we should maybe be pushing a bit closer towards that kind of $45, $50 range. So I think this is getting a little bit undervalued here for DraftKings. I'm not buying though. I'd buy maybe the low 20s, but I'm not buying at the moment. But pre-market is having a bit of a bounce up 5% in pre-market. And you can see here that there was a lot of volatility in the after hours, and that came down to a FanDuel announcement, but then DraftKings made its own announcement, and that's what's also led it to go up. And then also maybe the announcement they made, and also FanDuel's numbers. So FanDuel, owned by Flutter, DraftKings rivals, having a very good day. I used to own this stock, I don't own it anymore, but up 10% at the moment, and they gave really good numbers. They raised the guidance. They said the US is going very good once again, which is good. Good to see that FanDuel and Flutter and DraftKings are still doing very well. But what came out that was surprising is they said they're not going to match DraftKings' plan on the extra tax. So I'm sure most of you guys are aware. There was a state, Illinois, that went from, I think it was 20% tax, and I think they put it up to 50% or 40% tax rate. Big hike up. They want to make more money. They've been a little bit greedy. Instead of doing the simple thing of just doing iGaming, they can make more money from iGaming, they decided to tax the hell out of DraftKings and FanDuel, which is unfair. They're already paying the fair share of tax. You know, there's a legal black market there. They don't want to be forcing more people from where they're making money from DraftKings and FanDuel legally to that illegal black market. So they've got to be careful not to take the mick a little bit and take the piss from the amount they're taxing them. But, you know, rather than doing that, they should have allowed iGaming, in my opinion. But, hey, it is what it is. They decided to really hike up the tax rate. I don't think they should do it, and I think that FanDuel and DraftKings should stand the ground a little bit and go, you know, you're taking the piss a little bit. But it is what it is. DraftKings came out and said they're going to do a extra tax charge on the bets, and they were going to put it on the app saying, look, we've got to charge a little bit more extra on your winnings because we have to pay higher taxes. And everyone, including me, thought FanDuel, Flutter would do exactly the same, and they're not. So big surprise there. I'm a little bit annoyed by Flutter and FanDuel. I believe they should have stuck with DraftKings and done it to prove a point of, like, you can't just keep taxing us ridiculously. But they decided not to do it, which was a surprise. So because of that, DraftKings felt like, okay, you know, if you're charging extra taxes on it, everyone's just going to go to FanDuel, and people panicked. And I thought, even me, I was thinking, I don't know if that was a good move. However, what happened is DraftKings literally came out, and they probably sat there waiting for their earnings to see if they were going to do it, and they said that they are going to drop the subcharge, which is the right thing to do, because otherwise they would have got absolutely crushed by FanDuel in Illinois. So they had to do it, and it's the right decision. What did annoy me a little bit, and it's the first time that I've been a bit disappointed in the management team from DraftKings, is that rather than this happening publicly, they should have called DraftKings up and not DraftKings, they can't call themselves up. They should have called FanDuel and Flutter up and go, what do you think about this idea? And we can kind of stick it to Illinois and their higher tax rate. They should have done behind closed doors. And if FanDuel came out and they said like, no, we're not going to do it, it never comes into public that it was considered. And maybe there's a little bit of reputation damage there, a little bit, hopefully not too much, but this is something that DraftKings should have done behind closed doors with FanDuel and Flutter, and it should have come in the open. So a little bit disappointed from DraftKings management team there, which I don't mind saying, because obviously I'm normally quite happy with them and talk them up a little bit. A little bit disappointed from them point of view, but I think they've done the right thing on dropping it, but I think they should have all been done behind closed doors if they were going to do it. But yeah, hopefully not too much brand damage, but they made the right decision. If FanDuel aren't doing it, then they had to drop it. But I'm also disappointed that FanDuel didn't stick with DraftKings here, because they need to make a stand on this higher tax bracket. If every state goes from a 20% tax rate up to like 50%, it's going to crush both of them. So why not make a stand now? A little bit frustrating, but yeah, that's kind of where everything is at the moment. So yeah, that's kind of my thoughts on where DraftKings is at after their update that came out yesterday. So yeah, that's video today, guys. Thought I'd do a quick recap on the inflation, Starbucks, Huya, and also what's going on with DraftKings at the moment. So because it has been a bit of a volatile one. Hope you enjoyed the video, guys. See you in a bit.